Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will record the purchase of furniture into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. If you've been continuing with us, that's great. If not, that's okay. We're going to be entering the purchase of furniture. As is typically the case with QuickBooks, there's a couple different ways that we can do that. We're going to do this by entering this into the register. Now, this case, we're going to be purchasing this furniture simply for cash, and therefore we can enter the transaction directly into the register, or we could issue a check for it. However, if we were to do some other format of financing the furniture, as we'll do later on, we'll have to do some other format. So we'll see that later on. For now, we're going to be purchasing furniture just for cash, and we're going to be practicing using the register in order to record this. So in order to do that, we're going to go to the accounting down here, left-hand side, accounting. This will give us our chart of accounts, and we'll see that we have a register for every account. Now, if cash is affected, the easiest register to use is cash. If we wanted to enter this information into some other register, we could go to furniture and fixture and enter it into that register. But it's typically easier to think about what's happening to cash and just do the other side of the account to whatever other account is being affected. So we're going to select View Register for the checking account. And here's the information we have. We scroll over to the right just a bit. There's our running balances on the right. Scrolling to the left, here is the transactions that we have so far. Within our check register, we have a few different options. If we select the drop down over here, we've got the check, the deposit, the sales receipt, the bills, receive payment, refund, expense, transfer. In our case, we could use the expense item here, but we're going to say it has a check number, so we want to put the check number in it. So we're going to use the check item up here. So we're going to say the check. And here is our check, and we're going to say the date of the check is 01/09/21. Remember that we will be working in the month of January 2021. That's where we're going to be starting. We have to enter the check number because this is the first time we've had a check number. We're going to start off with 1002. From this point somewhere forward, it should populate for us within the check number here. Now we're going to say that the payee is going to be Office Depot. And we have to add Office Depot. We don't have that yet, so it's going to say, if I select tab or click here, if I select tab, it's going to say, do you want to add Office Depot? And we're going to say yes. It's going to be a vendor. That's just going to be the default. So it kind of just guesses. Typically guesses right because we are here in the expense window. So QuickBooks is pretty good at that. If we choose the right category here, then of course, it can say, well, if you're buying something, we're probably going to be dealing with a vendor as opposed to a customer or employee. Memo, we could put a memo here. I'm not going to put one, but we could put purchase furniture or something at that memo section. And then we're going to say that the payment amount is, $16,000 for our furniture and fixture. Tab to the deposit, no deposit because this is a payment. And then we're going to tab over to the other account that will be affected. And it's going to be, if we select the drop down, it'll typically find the expense account because usually we would be entering an expense account. But we're really looking for an asset account. So I'm going to scroll down. We're looking for furniture and fixture. Here it is. Now, if we knew the account name already, then we would want to start typing it and it'll auto-populate the accounts that would fit what we are typing. And then we could select the account that we want. So it's going to be furniture and fixture. And we're saving that. And the transaction has been saved. That is good. So if we take a look at all these transactions, then scroll into the outside, we see the amounts here went from 140 down to 124. Now let's take a look at the reports and see what we have there. If we go to the reports on the left-hand side, we look at two of our main reports with a balance sheet and a profit and loss. We can go to the balance sheet and select the balance sheet. I'm going to run this for the month of January of the year we're working on. So 01/01/01/01, 2/1/2 013121. So there we have that, and we will run the report. Here is our balance sheet. So cash was affected. So if we select the cash account, then we can see that we have this furniture and fixture, and it's a check. There's the check number. There's the split, meaning the other account that will be affected. And if we click on that item, then we will see what actually happened. So here is our check. Gives us not the register, but the actual check. So if we entered it as a check, this is what it would look like. We entered it into the register, basically creating a check as we did so. And so we're going to close this back out and scroll back up to the top and go back to the report summary. Back to the report summary. Alright, so there's going to be that side. Then the other side of this thing is going to be the furniture and fixture. Here's the furniture and fixture, 16,000. Once again, if we go back into that, we can see the check. Once again, same check. So every transaction is going to have those two amounts. If we go back and forth from the financial statements, typically the balance sheet and the income statement is all we really need, then we can really get a good idea of what we're doing here in terms of even debits and credits, or at least what accounts are going up and down, and that'll give us a good idea of what QuickBooks is doing as we go. Going back to the report here, and that is the furniture and fixture purchase. Now we're going to do this one more time. So we're going to go back to the accounts down here. We're going to enter one more piece of furniture from Amazon this time. We're going to go to accounting, and we're going to go back to the register. So we're going into the register, click anywhere here, or click on the register apparently. Click on the register. And then we're going to add, once again, a check. So we want to add a check. We are going to have a check number. So if we put the check in there, it should populate for us at this time now. We're going to put the check as of 011121, and the check is going to be 1003. Note that because of the settings, it's defaulting to the current date before I put the date I'm working in the future in this problem. So just be aware of that. That's typically good that it'll default to the current date. But when you're working on a practice problem, you're going to have to make sure that your dates are correct, or else you're going to have date problems. So we're going to say Amazon, and that's going to be our payee tab. It's going to say we don't recognize Amazon, you want to include. We're going to say yes, it's going to be a vendor. Selecting the drop down, that's the correct vendor, so that is good. And we'll tab through that memo, and we'll tab through that, and the payment amount will be 7,000. Tab, tab, tab. And the amount then, the other account then, will be furniture and fixture. Again, if we select the drop down, it's going to go to the expense accounts, and if we scroll down through them, we will then find under the expense account the account we want, asset account, furniture and fixture. Selecting furniture and fixture, we want to make sure once we've got everything in there that we say save. If we don't say save, then it doesn't save it. So say save, and then we'll have it. So say save and we'll have it. And then we're going to go back to reports. Let's check this one more time. Go back to the balance sheets, all we really need. No income statement account affected. Note that when we purchase furniture and fixture, not an expense, even though we're paying cash in this case, not decreasing net income. So we're going to go, it will when we depreciate it, by the way. So then we're going to go to the balance sheet. We'll select the balance sheet and check the dates one more time. So it's going to be as of 01/01/21 to 01/31/21. And we're going to go ahead and run that report. So there we have it. If we go into the checking account, so we'll select the checking account. And here is our items here. So we've got the 16 there, and the other happened on the 11th. So there's our two amounts there. We'll go back up to the report summary, and then scroll down, and we'll see furniture and fixtures, same items. We'll check that at the 23,000, and we should see our two items there, the 16 and the 7. If we select the 7, then we will see the amount we put in there, and that's going to be this amount here. It's going to be a check that we have written. Hello, in this presentation we're going to enter a purchase order and add a new inventory item at the same time into QuickBooks Online. We will have a comprehensive QuickBooks online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. We will be continuing with the Get Great Guitars problem. If you've been following along with us, that's great. If not, that's okay. We're going to be entering a new purchase order with an added inventory item that we will have to add as we go. We're going to go a little bit faster. We've seen the purchase order before with no new inventory item, so we'll go a bit faster. If you want more detail, take a look at that prior presentation. To enter the purchase order, we're going to go up top. We're going to select this item, this little plus item, and this is where most of our transactions will be located. So we have the customers, we have the vendors. We're going to be here under vendors because we're going to be purchasing from a vendor, vendor meaning who we purchase from. And we're going to scroll down, and we want, of course, the purchase order. So we will select the purchase order. It's important to note what the purchase order is. We're not actually purchasing the inventory or paying for the inventory. There's no actual financial transaction going on here and it's different than if we were to purchase something from like Amazon, where we would make the payment and then receive the inventory or what we bought later in the mail. Here, we're not making a payment. We're going to make the payment when we receive the inventory. We're just requesting the inventory. No financial transaction really happening. Just going to be a paper request. So in order to do that, we're going to go through here. I do recommend tabbing through these fields as we go so that we touch on every field, and that'll just be good practice for going through any type of data input. So we're going to start up at the top. We're going to choose the vendor. This is going to be a new vendor, so when we select the drop down, it's going to be Gibson. We don't have a Gibson yet, so we're going to add the vendor. I'm going to do that by first just typing in Gibson, and I'm going to select tab, or if we could just select the plus here, select plus, and it's going to guess that we want to add Gibson as a vendor, and that is of course correct. So we're going to say add and save. Then we'll go ahead and tab through. There's no email, Gibson. We're not going to put a mailing address yet, so we're just going to keep the name, although we might want a mail address. Ship to, we're going to keep that the same. Date, we're going to change the date to, it will be as, we're going to say 01/12/21, January 12th, 2021. Note, this is going to give us the current date, but we want to be working on the future in our problem here, so we will change the date. 01/12/21, January 12th, 2021. We'll keep tabbing through here. So we've got the product or the service item as the next item we're going to have. These are going to be inventory items. And what we're going to do is request these inventory items. They've already been input into the item list for the most part. However, we're now going to be entering an item that has not been input into our item list, and we'll be inputting it or creating it as we create the purchase order. To do that, we'll select the product or service. And once again, if we select the drop down, these are all the guitars that we've purchased before, and we have a purchase order or item set up for them. This one we're going to say it's abbreviated as a GSB, so we're going to call it a GSB, not included yet, and therefore we will add it. So I'm going to add this information. It's going to be an inventory type item, so we're going to say it's going to be inventory, meaning it's going to have both a sales price and a cost. It's not a service item that we will be inputting. We're going to keep the short name here. We could put the full name, and it's going to be actually the Gibson SG will be the full name. I'm going to keep the GSB here because that's going to go under the product item. We're going to scroll down. I'm going to tab through these items. Category, no category. Initial quantity, we don't have any because we're just purchasing it. As of date, report point. We're going to keep scrolling down. I'm tabbing through these items. Inventory asset account, it's going to be an inventory asset account, so that's because we're purchasing inventory, so that's correct. Sales description, this is where I'm going to put the full name. And that is going to be a Gibson SG. So we're going to have the Gibson SG there. And then we're going to have the sales price. This is what we're going to sell it for, not what we're going to put here in the purchase order. The sales price, not the purchase price. That's going to be 777.40 cents. The income account, now it might default to something other than, it might say sales of product. We're going to just call it sales. That's going to be our sales of product. So I'm going to select the sales account. Then tab through this, and then the description once again, Gibson SG, And that's the purchasing information. And then finally the cost. This is what we're going to buy it for. This is what's actually going to go on this form. And that's going to be the $598. That's what we're going to be purchasing for. And that will go to the cost of goods sold, meaning when we sell it, we're going to credit or increase the sales amount of, and that's our revenue or income account, by the $777.40. Then we're going to increase the cost of goods sold, which is an expense, of the $598. The difference between these two, of course, being the profit when we sell this particular Gibson SG guitar. So we're going to save and close that. Actually, these are required fields up here, so I'm going to put initial quantity on hand 0 as of date. It's going to be the beginning of this year, 01/01/21, and then we're going to say save and close. And then we populate this item. So here's our new item. It's a GSB Gibson SG. We're going to get one of those, and the rate's going to be $598. That's of course the purchase price, not the sales price that we had included. Sales price will be included when we make the related invoice to this sale. And we're going to again add a customer here. Now, once again, this isn't going to be something we're going to use all the time for every purchase order. We might just be buying this guitar to have in the shop to sell to whoever wants to purchase it. But in this case, we're going to add the purchase order saying that we're purchasing it for a particular customer who came in and said, I want this particular guitar. Could you buy it? Want this color or these dimensions for it? And then we're going to buy it. And then we'll be able to link this purchase order to a particular customer. That customer being Music Stuff Store. So we're going to call it Music Stuff Store. Add the customer. And so that's going to be our customer there. So here is our information. We're going to save this note, however, that although we have information down here, this is really unusual for forms in that we don't have an actual financial transaction. No financial statement account, no balance sheet account, no income statement account being affected by this $598. Just a request that will then help us to prepare this information. When we receive the inventory, we can then match out what we got and see if it matches what we have here, and then use this information to help populate and record that inventory as well as the next invoice or sales receipt once we sell this or finish the sale to our client, customer, in this case, Music Store Stuff. So we're going to go ahead and print this information. If we had the email address up top, we could email this, save an email directly from here. We are going to print it as a PDF file so we can email it there and or send it out. So we'll go ahead and print this, and I am going to then download this information. And it's going to the place I want it to go to, so I'm just going to keep it there. And we're going to put the date. It's going to be 01/21. And note, I already have one there, so I probably should put something else. Music Stuff Store. And that's the PO. Okay, and we'll save that. And there is our purchase order. Hello, in this presentation we will be recording the purchase of furniture and an investment within QuickBooks Pro 2018. If you have been working along with us, that is great. We will be continuing with the problem. If you have not been working along with us, that's okay. We're going to be entering 2 transactions. One to record the investment from the business into an investment, how to record that in terms of QuickBooks. What does the transaction look like and what are some ways to record that transaction. Then we will record the purchase of furniture, and again, same questions. How are we going to record that transaction within the QuickBooks program? We are working in the Get Great Guitars problem here, so if you have been following along, you'll have this set up. If not, that is okay. We can just see how to record transactions such as these. If you have the backup file and want to start exactly where we are at this time, just so we're in the exact same location, then you can take that backup file and go to File and Open and Restore Company, and you want to restore the backup, and that'll put us in the same point. So also, next point we're going to have is to have the open windows open. Typically, I like to have that. When you open the program, the default typically is to have these shortcuts open. I would rather see the open windows, and in order to do that, you go to View and Open Windows, and that'll show us what we have open at this time, that being, in this case, the Home tab and the balance sheet. This is something I didn't know I had open, and I'm going to close it. So I'm going to go there into that one, and I'm going to close that out. And that's one of the benefits of having the open windows open. You can see what you are working with and toggle back and forth within them. First transaction we're going to record is going to be an investment in stock for $12,000. So we're going to have a generic type of investment. We're going to be investing in Vanguard stock. We're assuming this is a mutual fund. We're going to put money from our checking account into the stock. Now, when we purchase the stock, we may be writing a check or we may do an electronic transfer, most likely an electronic transfer. What we want to do then here is to record that electronic transfer, which we would then see either at the point of the transfer or on our bank statements once we're trying to reconcile and record the activity. And therefore, we could record it in terms of a check and write a check here, but it may be easier, and it often is in a transaction such as this if we're not actually printing the check, to record this directly into the register. So that's what we're going to practice now, and if you're recording a lot of data within the register that you need to record you already wrote the check or you already have the electronic transfer and you need to put the data into QuickBooks, often easier to use the register than the form. It'll look a lot like a check register, and that'll be something that could be useful to understand to use. So in order to do that, we're going to go to the banking at the top. We're going to go down to use register. And whatever your bank account is, that's the one we want. We called ours the generic name of the checking account. If you select the drop-down, note you can use a register for any account. So it's not like something that's restricted solely to cash accounts. QuickBooks tries to use the register for everything, and in so doing is attempting to eliminate or at least reduce greatly the need for debits and credits and journal entries. Now, the checking account, if you're dealing with cash, either paying cash or receiving cash, you'd rather go to the checking account than the other register, typically, in my opinion. For example, if we had an account already set up, in this case, for an investment, then we could go to the investment asset register account and record that side of the transactions, and the other side would be to the checking account. So if we're not dealing with cash at all within the transaction, the point is we could still use registers instead of journal entries, but it gets more confusing if cash is not one of the two things involved within the transaction. So we're going to keep it on the checking account in any case. We're going to say OK. Here is our register. We don't have a lot going on at this point in time, but we can see that the balance is 140 at this point. We are then going to record this transaction for the Vanguard stock, meaning we're basically putting money into Vanguard for a mutual fund. We're going to make this a generic type of investment. We're going to put it in there as of 01/04/21. Note that we are going to have some transactions that are going to be a bit out of order in this comprehensive problem. So we are working in the future, working in 2021, that being the current year we are working in. Now, if this was a electronic transfer, then we might put something in here. I usually put like other or transfer or something like that. If it's a check number, and we're going to assume it is a check number here, we will start with the check numbers, 1001. Now again, this might, and typically if we were putting stuff into Vanguard, it might be an electronic transfer, in which case we could still use this register. It's just that we wouldn't want to reference a check number here, but we're gonna assume we wrote a check for it, and so we can see what the check numbers will do and see that they will be automatically generated. This is the first check that we have written, and therefore we're gonna assume our checkbook begins on 1001, that being the reason, and we have to type that in there. After that point in time, the checks should be automatically numbered. The checks, even if you buy checks, will be something that will be printed outside of QuickBooks, and so even if you're printing checks through QuickBooks, you're going to have to get the checks that are already pre-numbered, and that's going to be one of the internal controls, one of the checks and balances to make sure that errors aren't happening, meaning if the check numbers are sequential and they line up to the sequence that is showing up within QuickBooks, then we're more confident that checks have not been stolen, and that is a good thing. So that's the pre-numbered sequence. It should just automatically generate the check number after this point. We're going to say the person is going to be Vanguard, the company, and say tab. We haven't set this up yet. We're going to set this up now. We're not going to do the full setup. We're just going to do a quick setup here. So I'm going to say quick setup, and this is not going to be a vendor. It's not going to be a customer. it's actually going to be other. So we're going to take other. It's not a normal customer or vendor, so we'll say it's going to other. It's going to be an investment, and we'll say okay. And we will have a payment, so it will be a payment, and the amount is going to be $12,000, which we are investing. Now we're going to invest that. Notice I'm tabbing through this also, and it didn't go to the deposit side because if there's a payment, there will not be a deposit. And note, this is a bit different than the checkbook, again, is that we have to have an account. It's not enough to say it's Vanguard, even though we know who Vanguard is if we're working with our own books. But we need to have an account as well as the name. And the account, we're going to say this is just in short-term investments. We're going to put all the investments into short-term investments. And note, we don't have that account yet. So when I select tab, it's going to say, hey, you don't have that account yet. Do you want to set it up? We're going to say yes. So I'm going to say tab. It's going to say set up that account. We're going to say yes, please set up the account. And we have it guessing in this dropdown that the setup should be to an expense. That is not correct in this case. Typically, oftentimes it is correct. Most of the time when we're writing a check or recording a check within the check register, it is for an expense, but it may be for something else. It may be for an asset such as a purchase of equipment, or it may be for an asset such as the investment in this case. So what we want to put it into is not going to be an expense, but we're going to put it into other current assets. So I'll put it into other current assets here, and we're going to keep the name. I'm not going to put it in any subcategory. However, note that if you want to track your investments a little bit in more detail within QuickBooks, and you have a lot of different types of investments, and you're just basically going to update them each time you have the statement, then you could have just short-term investments and then a subcategory for each individual investment, and then go in there and track the gains and losses for each individual investment. We're going to group all our investments in this case into one investment line item, that investment being the short-term investments here. So I'm not going to have a subcategory. We're going to keep the description. We're not going to deal with the tax line at this time. In these example problems, again, the tax line would be nice if you are using QuickBooks, especially with some of Intuit's tax software that would kind of integrate the tax preparation process. So we're going to go ahead and say save and close. And there we have that. Remember, it's not going to actually record this until we hit enter or tab again until it gets to the next line in essence. So if you leave, if you look somewhere else at this point, it's not going to have done anything until we say enter or tab. And there we have it. So there's the 65, reducing our balance here. The other side going to the investment account where it's up here. Notice it adjusted it by date. So it bounced it up here to be in order by date. But here's the 1001, Vanguard 12, and the investment. Now, if we want to see that on the reports, which we typically do, you want to kind of get an idea of where these things are going. What does it do to the end product? What does it do to the financial statements? How is it making us look as a company? Then we're going to go, this is only going to be affecting the balance sheet. So I'm going to go ahead and check out the reports. We're going to go to company and financial, scroll down to the balance sheet standard. We're going to change the date to 12/31/21. That's the dates that we are working in for this example problem. And we know that cash went down, so if I want to see what happened within cash, we can double check on cash. And I need to change the range. I need the beginning date to be 01/01/21, and that'll give us the whole year's worth of data if we tab through. And there we have it. It's decreasing the original balance minus the 12, and that's what's impacted there. I'm going to close that out. We probably knew that. The other side is the new thing. This is where we placed it into other current assets in the assets section. It's not on the income statement. It's not affecting net income. It's just one asset going down, another asset going up. This is the key component that we want to make sure that we do when we record a new account like this. If we put this in the expense section, we kind of mess things up and we'd have to adjust that at some point. So here's the 12 there. Obviously, if we double click on that, that is all we would see at that time. Going to go back to the checking account and we're going to record the next transaction that we were going to work with, that being the purchase of office furniture. So we're going to go back to checking, and again we're going to do it the same way. Note that if you were to write a check directly for office furniture, then you could go to the home tab and you could write a check, and that would then write the check, and it would basically do the same thing that we are doing here. You can also go to banking and go to write checks at the top to write a check. However, if you're in a situation where the check has already been written, or you're doing some other type of payment that you need to later put in to QuickBooks, it's oftentimes good and useful and faster to use the check register. So that's what we're practicing here. We're going to go back to the checking account. We will be writing checks later, and it'll be great. But we're going to go back to the checking account here and enter the next transaction. We're going to say that we purchased office furniture on 1/9. Now I'm going to make the date go up, not by retyping the whole thing, but just hitting the plus button. And note that feature can be useful. If we hit the plus button a few times, go up to 109. Anytime you can use a keystroke rather than typing in the information, you're going to be working a bit faster, and that's always going to save a little bit of time, which is always nice. And note when we tab over, it's going to have the check number, so hopefully that's the correct check number. If it was not a check, if it was an electronic transfer, then we would delete it. We would put transfer, electronic payment, some type of abbreviation other than a check number. And then we're going to scroll over, and I'm going to say we bought it from Office Depot. So I'm going to say Office Depot. We don't have this set up yet, so when we say tab, it's going to say you don't have this set up yet. And again, I'm going to do a quick setup. We're just going to set it up quickly rather than go to the full setup. So we're going to go to setup, vendor, customer, employee, other. In essence, this is a vendor, so it's guessing correctly here. It will typically guess as a vendor because typically when we're using the register, we're making a payment. Usually payments go to vendors, people we purchase from. So we're going to say that is okay. We'll keep that. And then we're going to say the amount that we purchased was $16,000. We're using nice round numbers here. And note that it's not going to go to the deposit side. We need to make sure that we're either going to the payment side or the deposit, whichever is applicable. And then QuickBooks will not have us go to the other one because you can only have one at any given transaction. Then the other side of the account is going to go to furniture and equipment. We had already set that up. We hadn't set it up, but by picking the chart of accounts, by picking the type of company, QuickBooks had given us a preliminary list of accounts, one of them being, if we start typing in, furniture and equipment. Note that it's a fixed asset, so that's the key point. If you do not have a furniture and fixture account and you're recording it, you don't want to put it in there as an expense, which will often be the default if you're creating a new account. You want to make sure you're putting it in there as an asset, not just an asset, but a fixed asset, assets that depreciate. That will get it in the correct ordering. It will then not put it on the income statement, but on the balance sheet as it should be, and put it under the subcategory of fixed assets. Sec tab, and then we're going to say, note that it's not going to record it until we say enter. So I'm going to go enter, and then it records it there. Again, it's going to record it by date. Note that because we put this on 10/9 right before this transaction, that we did have an overdrawn until the loan happened here on the next day. So just something to note, just the dates that we put the problems in there. It did rearrange the date up to here. Then if we want to see what is going on, once again, we can go back to the balance sheet, and notice it's going to say refresh needed. So I'm going to go back there, and it automatically then refreshed. So how can we check that? We can see if this transaction has happened. We're going to go into the checking account, double click on the checking account using the auto zoom feature. Going to change the dates to 01/01/21. And there we have this transaction of the 16 right there. If we want to see that transaction, if we actually want to see the form or the driving document that QuickBooks has created, we can zoom in on that. And we see that it is a check. Note that we put it in the check register, and QuickBooks deals a check with that when we put it in the check register. Here is the check, and the check itself means that we're decreasing cash. The other side of the account then is the furniture and fixture. So let's look at that other side. Going to close this out, going to close this out, back to the balance sheet, looking for furniture and fixture. Note the categories of the assets in the balance sheet is going to be assets. And the first check is the checking account, the cash, then accounts receivable, then other current assets, then the fixed assets. That's critical. That's important to have within your financials. That's why it's important to make sure you put the furniture and fixture into the category of the fixed assets that will then be depreciated. And we see the 91 there. Let's see what that consists of by double clicking on it. And we will change the date to 01/01/21. And there we have it. There's the 16 right there after our beginning balance. If we double click on that, then we're going to see that same check. There's that same check from the other side of the transaction. So I'm going to close this back out. Going to close this back out. Going to go back to the check register, and note that is how we're going to put this information into the check register. We're going to do one more here, and that's going to be for furniture and fixture, another transaction purchasing the furniture and fixture, and that will complete this process. We're going to say that this transaction happened on 1/11. Note that I'm just having the plus 2 times, saying plus plus brings the date up, and it's going to give us that check number, which we're going to say is right. We're going to say we wrote it with a check, and now we are recording it within QuickBooks, practicing the recording within a check register. And this one we're going to say we bought from Amazon. And I'm just going to put Amazon, and I'm going to say tab. Once again, we have not set that up. If we want to put the address and a lot more information, we do the setup. That'll give us more detail. But typically when we're paying the bills, the name is often what we need. That's what we would need on the check. That's what we would need on the reference. So we are often good with the quick setup, which will just give us that. This then also a vendor, the default is correct in this case. We're going to say okay. Then we're going to put the amount, $7,000 in this case is how much we are paying for the furniture at this transaction. It's going to then go down to the account that we need. We're going to have, once again, that same account, furniture and equipment. And it's going to pick that account. Notice I'm just typing in there. It then autofills. It tries to find that. If we have no idea where it would go, we first would want to hit the drop down and scroll through. Note that it's in order. Assets, liabilities, equity, income, and expense, and more specifically, the asset of cash, then the asset of receivable, then the current assets, then the fixed assets, then the other assets, then the liabilities, including the payable, followed by the credit card, followed by the other current liabilities, followed by the long-term liabilities, and then the equity, and then the income, then the expenses, first the cost of goods sold expense, and then all other expenses. If we know what we're doing though, then we're going to type it in there. And if we know which account we are working with, we'll type it in there. And then tab, once we see it, that's going to be the quickest way to select. And then we just want to say enter once we have selected to make sure that it then records. That's going to be the last transaction we have. Let's just check it out one more time. We know what's going to happen on the balance sheet. It's going to decrease the cash. The ending cash balance now should be $105,000. And it's going to put an increase into the furniture and fixture, an amount we can't see here on the check register. This register representing the cash balance, not representing the furniture and fixture balance. If we go back to the balance sheet, cash is at 105, furniture and fixture is now at 98. If we zoom in on that, there it is. If we then go to the date range of 01/01/21, we can see that second transaction there. One more thing, just want to point out, just want to note as we see this, we could enter this, as we said, a few different ways. We could have written a check. If we were actually processing the checks, that is what we would do. And we could also record this not in the cash register, but in the furniture and fixture register. And just to show you how QuickBooks does that, let's take a look at that. We're going to go to banking at the top, use register, just like we did when we went into this check register. This time, however, we're looking for the furniture and fixture ledger, just to see what that would look like. We're going to go down to furniture and fixture and open that ledger. here we have it. It looks a bit different, but it's going to be the same type of concept, same type of idea. If you open up this splits column, it'll show you a more accounts if there's basically more than 2 accounts within a transaction. But this is what happened. We had the beginning balance. We didn't do that here. But then we had our transaction here. If we were to enter the same transaction from the other register, we would say this register, meaning the assets of the office equipment, would have gone up by that transaction with the 16, an increase, rather than a decrease in cash. We're talking about the register of equipment having an increase in the office equipment. And the other side then would be the checking account. So here's the checking account. So it's the mirror image, if we go to the checking account, of this transaction here. So note that it is possible, and I would not recommend ever putting it into the registered checking account for equipment like this. However, this is useful to know, especially when you see a transaction that does not involve cash. If for example, we bought equipment on account, or bought equipment for a loan, we might want to go into the equipment account and say there's an increase in equipment, and then go, okay, what's the other account that we're going to put that into? And we would then put it into some type of loan account. That may be an easier way to think through it, even though cash is not affected, and avoid having then to use journal entries using debits and credits if we don't really understand debits and credits. So just want to point that out, and that's going to be those 2 transactions, or 3 transactions.